What's the state of the housing market? With rising interest rates and inflation impacting property values, it's more important than ever to understand the shifting landscape of real estate. The housing market matters to the U.S. economy. The National Association of Home Builders, they state that the housing's combined contribution to gross domestic product, it generally averages between 15 and 18% and occurs in two primary ways. Residential investments. That's everything from new single family, new multifamily, and manufactured home construction, the broker fees, and remodeling. The second would be consumption spending on housing services. That is 12 to 13% of GDP. That includes gross rents and utilities paid by the renters, as well as the owner's imputed rents and utility. This illustration shows its impact. We take a look at the illustration. The National Association of Realtors, they state that home purchases, particularly the older ones, that triggers additional consumer expenditures. The new homeowners usually want to invest in home improvement projects such as furniture, appliances, services. They want to personalize and update their living spaces. So although their new home is an old house, they want to invest in it. They want to make improvements. Total economic impact is a nice chunk of change. The income generated from the real estate industries, the expenditures related to home purchases. You're adding this up with the housing-related expenditures and the new construction homes. So the challenge now is the affordability. In 2025, it's not looking good. This exhibit shows home prices, housing costs, and wages increasing. And the prices increase for homes in the U.S. That can help the economy. Yet it also creates a challenge for those looking to purchase a home. Across the United States, the home values are up 45% since February 2020. That's just before the pandemic. 45%. Think about that. Wrap your mind around that number. Now, typically, home values grow about 4% annually. So that means these past 5 years, they've packed on more than a decade of appreciation. Now, looking at that graph, you'll see that the wages are far below the current home prices. And that's creating a scenario where the realtors have called lock-in effect. The rapid changes in mortgage rates since 2020, well, there's a hesitance on homeowners to sell their homes due to the low mortgage rates that they have locked in right now. It's theirs. They don't want to go from their probably 3% or lower mortgage rate to our current disaster of about 7%. According to Nick, CEO of Reventure app, he's been tracking the housing trends. He's stating that the current average monthly mortgage payment is around $2,800. Yet for the average person, they're more comfortable to be able to afford about $2,100 a month. So you got that $700 discrepancy. And this is based on a median income of $84,000 in 2025.
No one is talking about this, but I will. Here are your top 5 reasons for homebuyers' remorse. A shocking 72% of homebuyers who purchased in 2021 and 2022 have some regret over their purchase, according to Realtor.com. Here are the top 5 reasons. Number 1, unanticipated repairs. They purchased a home they thought was turnkey and ended up with a whole lot of work on their hands. Pro tip, don't skip the inspection. Number 2, a change in personal circumstances. Maybe a job relocation or an unexpected live-in family member. Number 3, damage that was underestimated. So you found a deal on a fixer-upper. Unfortunately, you didn't get an accurate bid for the repairs. Number 4, probably my favorite, not following the pro's advice. Maybe the house, neighborhood are in the perfect location, but the kitchen is outdated and that remodel is going to cost you. And number 5, not planning for the expenses of owning a home, like a lawnmower and furniture. So work with the pros and plan appropriately so you can avoid regret.
Those are all good points. Because honestly, many people today are regretting buying their house. They're what we've been calling lately house poor. The comment here states, I love my home. I bought it in December of 2022, but I have to regret it because it's way more expensive than I thought it would be a year and a half later. and they want to go back to apartment. Yeah, they're house poor. It happens. Yeah, people get worked up and excited about, oh, I'm gonna own my first home, and rightfully so, you're gonna be pumped up about that. Yet they may not be aware of all the financial responsibilities that come with owning a home. Because now, unlike renting a place where they take care of all the repairs, now it's all up to you. So you got to have that extra cash. The comment here says, I got an inspection, but the inspector missed all the mold. Cost me 30 grand in repairs in an unlivable home. That sounds like more like a worst case scenario, but that's a disaster. 30 grand. Remember back 2020, interest rates were hovering around 3%, and now they're hovering around 7%. Everybody wants to go back to those 3% days. The Fed Reserve has spent the last few years increasing rates to fight inflation. By mid 2025, the average 30-year fixed mortgage rate is 7.5%. 7.5%, where 5 years ago, it's about 3%. Wrap your mind around that. That's going to be a tough pill to swallow for, especially if you currently own a home and your mortgage interest rate is roughly 3, maybe 3.2, and now you've been smacked upside the head with 7.5%. So how are higher interest rates affecting home affordability? Well, the higher interest rates are making borrowing money for that mortgage more expensive. We're going to look at an example here. Let's say you get a loan amount for $315,000. If you had a mortgage rate, interest rate at 3.5%, and that's a bit high if you went back to 2019, 2020. So if it's 3.5%, you're looking at the principal and interest monthly payment of $1,415. Now fast forward to today, at 7.5%. That same loan, that's going to be $2,205 a month. So what happens when the interest rates have risen so much? Buyers qualify for less. Some get priced out of the market for a house that they could previously afford if it's 5 years ago. You have competition cool certain prices, and you have sellers that may adjust their expectations. So what does that mean for buyers? Well, the key trends in 2025 for home buyers, you got increased demand for lower priced homes and starter homes. You have more interest in adjustable rate mortgages. That's where the buyers look for a way to lower their payments. I'd caution in that though, because adjustable rate mortgages, they sound great on paper, on the surface level, because oh, look at that low interest rate, and then entice you to sign on the dotted line. But what happens is 5, 6 months down the road, boom. Oh, you know that low rate you had? Nah, that's gone now. Yeah, we're going to tack in a couple more points. So you might have had a 3%er, now you're up to 5.5, 6%. So it's going to go from affordable mortgage rate to now what are we going to do? Because you locked in on that. It isn't like you have a choice to bail out. If you're 6 months into your ARM and they raise the rates, you got to pay that higher rate. So it's something to consider because you're locked in and you may not be able to afford it. Another trend is longer home searches because buyers are trying to adjust their expectations on this, what I would consider an overpriced market. There is a bubble. And we have greater emphasis on credit scores to get better rates, obviously. But even with a great credit score, I checked into this in the past few years. My credit score is over 800, and their rates still, they're bad. And you're not getting a big difference. It's not like a car loan. You can see a huge difference in interest rates. Not so much the housing because it's all bad. So it's the lesser two evils. It's I got a great credit score and I got this interest rate. It's bad. I don't have very good credit. Okay, so this is worse. But the bottom line is they both suck because interest rates are just too high right now. So how are you going to navigate the rising rates? Whether you're a buyer, seller, investor, you got to employ some kind of smart strategy to. For the buyers, you got to shop lenders because even a 0.25%, that's a difference in savings. I mean, if you're actually open to buying a house in the current state of our housing market here in the United States, shopping lenders is important because you already know you're going to pay a high interest rate. So if you know that getting into this game and you're willing to accept that, yeah, shop lenders, because if you can say 1/4%, that's going to affect your bottom line, no doubt. You want to buy down your rate if you can. Some lenders like to pay points up front to reduce your interest rate. You want to consider an ARM. I just discussed it, adjustable rate mortgage. I'm not a fan of it, but it may be appealing to you. So it's an option. You want to boost your credit score? Obviously, I just discussed that too. Because saving a little bit's better than saving nothing. That is, once again, it's based on the premise that you are willing to accept this disastrous housing market and you're going to dive in and buy a house anyway. Well, credit score is going to help. Man, help a lot, but it's going to help. So anything you can do to shave off a bit of the expenses, gotta go for it. And you want to work with a local agent, someone that, preferably someone you know, or a contact, some referral, because you deal with an agent that you know has proven himself in the past, so you know they're not going to waste your time.
Number one, check the zoning, because you might love your property right now, but if a gas station is being built next door and they're putting low income density housing across the street, you might not feel the same way about that property. Do not forget to check the crime map, because trust me, quiet doesn't always mean safe. Do not forget to check that school that's attached to that particular property, even if you do not have kids, because this is very important for resale value. Drive that commute at least 3 times a day, especially during rush hour traffic, because trust me, in the morning it might take you 20 minutes to get to work, but it will take you an hour and a half during rush hour traffic. And the last one, and the most important one in my opinion, is talk to the neighbors. The neighbors will tell you everything that Google doesn't. Most of the times they have information regarding everything that's happening in the neighborhood, especially something that has to do with that particular house.
Those are useful tips that you should apply when you're shopping for a house. You want to put yourself in the best position possible.
According to the American Home Buyer Report, 1 in 3 Americans actually regret their purchase. The actual reason was their new financial situation after buying the house. Let me explain. When you start the buying process, if you don't go through all of your numbers beforehand, like your payment, your cash to close, the appraisal, the inspection, costs can really add up. So if you're planning on just putting 3.5% down and nothing else, you could come into a big surprise and be in a completely different spot once you're in this house. The best way to feel comfortable and avoid this buyer's remorse is by doing the following. Talk to a real estate agent to know the whole entire process on the buying side. Then you're going to want to talk to a lender to make sure all of the lender and the financing expenses are all covered and clear before you even start the process altogether. Now, this won't make everybody avoid buyer's remorse, but at least you'll be able to make an informed decision and know all the costs that go into it. So your financial situation isn't the reason for any regret with you buying a house.
So these are useful tips. If you're willing to accept that 7% interest rate, I suggest you go uneducated so you can make an educated decision. You have all your information at hand. You can invest in the house that you want, that you know you're not going to get ripped off on. So I hope this video was helpful for you guys. If you enjoy my content, go ahead and click the like, subscribe. I'll see you in the next round.